Hi everybody, good morning. As usual, we'll wait for a minute for people to join. Hi everybody, thank you for joining. First of all, wishing my Marathi friends and colleagues a very happy Gudi Parva, happy Navratri, happy Pehla Baisakh, and happy New Year to those for whom it's a new year. It was a week of consolidation as the financial year came to an end and market consolidated in a range with Nifty being up by a slight margin, and broadly the market remained in a range. The global market also saw little volatility, and it was a period of consolidation and without much of news flow on either side. We recently came out with a report last week where we looked at Maruti and compared it with Hyundai, and our investment team came out with a view that while the businesses are similar, we will see a divergence in the stock price and the performance and the financial performance of both the companies, driven by the fundamentals. The report, for those who are in touch with us directly, they are in your WhatsApp or mailbox, and those who are not can take it from our Twitter handle or from the website. What we briefly spoke about in the report is comparing the business model of Hyundai and Maruti, where we highlighted that the segment they operate in is quite similar in the nature, be it sedan, be it SUV, hatchback. Maruti obviously has a deeper penetration with more models in each of them and more distribution because it's an older company. Hyundai is obviously much smaller in size in both in terms of sales and variety, which is why there's a difference between the market cap of both the companies. But the important point to highlight here was that Maruti is more balanced as a business because they have now got EV, they are in CNG, they are in hydrogen. And in terms of business segment, they are in hatchback, sedan, LCV, SUV, every place. Whereas Hyundai recently last year started the two-cylinder CNG. They are also getting into the EV, but they are nowhere near in the hydrogen space. And secondly is their main focus and the main revenue today comes from the SUV segment, that too from Creta. So Maruti is more broad-based as a percentage dependent on each brand, each segment, whereas Hyundai is more focused on SUV, and even in that, Creta is their biggest play. Now, hence, Hyundai has a concentrated risk, and they have recently planned to launch they have recently rather launched the e-Creta, which is the EV Creta, and they believe that will also be a success. What we have also raised the concern in case of Hyundai was that before the IPO, the company showed a strong margin growth and a strong revenue growth, leading to a higher profitability before the IPO. But post the IPO, the trend has changed. While Maruti and other peers continue to show some YOY growth in H2 FY25, Hyundai has shown slight negative growth, which means that probably they would have used their arsenal before the IPO to get the numbers pumped up, whether it is inventory filling or whether it is pushing the best of the things ahead of the IPO. What it risks is that there could be continuous earning disappointment. And a continuous earning disappointment is something which the investors will not like. As we have seen in many cases in the past, over many years, that post IPO, if their earnings misses for few quarters, then the investors give up on that stock, and the stock remains a value buy over a period of time. There are many names, be it Paytm, be it Nika, and many more in the recent glorious past. So, if Hyundai fails to deliver on the earnings for the next 2 quarters, we believe it will become a perfect case of a multiple derating and will remain a derated stock. And that's a big risk according to us. While in case of Maruti, as I already explained, that they are well diversified in terms of product, in terms of engine, and their margins are consolidating. Their numbers are growing. The numbers don't look too exciting because the product mix is changing. They have recently announced launching of the first EV Tara in their case, and hence there are enough levers for Maruti to go from here on. Maruti has has is a very good perfect play according to us within the auto, and investors who are looking to play the PV segment or the SUV segment other than M&M has options between Maruti and Hyundai. We believe Hyundai is not a great option. In fact, our recommendation to the investors is to move money from Hyundai to Maruti. That's the brief of the report. The detailed report is available, as I have already told you, either on your WhatsApp, on your mailbox, or can be downloaded from our Twitter handle. Happy to connect with any of you offline on this report to share our view and rationale. We have given few data around. We have given the company profile for those who don't haven't done the deep work on it. The second topic of discussion today is about the IPOs. At Sonora, I think in last 6 years, the only stock where we invested on the IPO, as in on the listing, was Zomato. Other than that, we have skipped all the IPOs, good, bad, ugly, whatever it is, because we believe that in most of the companies, the best is behind before the IPO, as the management and the investors, those who have invested before the IPO on the company, look for the best of the valuations before the IPO. Now, what it risks is that the earnings may not come as they have shown in the past, resulting into a constant supply from those who invested in the hope of a better growth. As a result, what happens is the stocks continue to underperform post the IPO. But at the same time, before immediately on the listing for the first week or in some cases first couple of days, the stocks do very well because that's the only time investors gets a supply. And hence, we have seen quite a few cases, especially in the last 2 years, where the listing has been super good. The stocks continue to do well for a couple of days, a week, and then it's tapered down. I think, be it Swiggy, be it NTPC Green, be it Bajaj Housing, they all are great companies. But they came out with the IPO. There was a lot of aura around it. There was a lot of demand around it, and people bought it thinking that there is no tomorrow in this, and they all are below the IPO price now. Forget about the listing price. In fact, we did an analysis since 2013, which is nearly 2 years and 3 months. In total, there are 40 IPOs where the market cap today is more than 10,000 crore. We have looked at 10,000 crore because we wanted to ignore the lower market cap companies. We- Most of the IPOs, the float would be 25 to 30%, which means that if the market cap is below 10,000, it can be manipulated as a price. So we decided to look at 10,000 crore as a base market cap. There are 39 IPOs in this 2.5 years, 2 years and 3 months. Out of those 39, 22 have a negative return and 17 have a positive return, out of which two has wonderful plus 100% IRR and couple of them are in 90%. But if we take up them away, most of them have underperformed Nifty in that period. And if I take the from the high, the results are very bad. So what I want to highlight is that it's like a normal curve. In few we will make good money, but we will lose money in quite a few also. So it's important to understand the business model. It is important to understand the earning trajectory before looking at buying something at the IPO just because there's a frenzy around it. Be it NTPC Green, be it Bajaj Housing, be it Swiggy, while they corrected with the market, but they haven't bounced at the same level. Be it Ola. So all the hi-fi frenzy IPOs in the last 1 year has given a negative return, while couple of them which were relatively low profile have done better because probably the investors, there's a concentrated investors there, and they are buying for a long period. We haven't looked at the earnings growth for all of them. So what I'm trying to say is each year we get enough of Nika ATM in different names and different forms. So just like any stock basket, it is not necessary that every good IPO will make money for you. It all boils down to at what valuation you are buying, what is the earning cycle, and that's what drives the price ultimately. That is what this analysis suggests. The second part of this analysis suggests is the frenzy doesn't last long. It gets normalized over a period of time. And which is why we want to invest in companies where we see earning trajectory. In fact, for whatever it is worth it, we made a lot of money for our investors in Zomato. But after the IPO, for the first few months, it went up and then it corrected nearly 60% from the top. And hence, but it was just that the fundamentals came into the picture and it became a value buy at around 50, 60 rupees. So, so we are and we believe that some of these will bounce back as their business model, and that's where we looked at Hyundai and we found that in we are not excited about Hyundai, so we thought we'll share that through our report. We have been bullish on Maruti for some time now, nearly 3.5 years, and Maruti has delivered fairly well in the volatile times. The earning trajectory has been similar to what we expected, though the multiple re-rating has not yet happened. Let's see when the market rewards it. Coming back to what I expect markets, we are heading into an interesting times. The year end is done, tax harvesting is done, the market seems to be consolidating, hence market will be driven by fundamentals hopefully from here on. The first important point to look forward to is what does Trump announces on 2nd of April. He has been talking about both sides. On one side, he's saying that India will not be treated as hardly as a Canada or a China or a Mexico, but at the same time, he says that India has one of the highest tariffs and a reciprocal tariff will be used against them. So we will wait for the news, we will wait for the facts and not try to preempt it. The second important parameter is the meeting of RBI rate committee, which is from 7th to 9th April. What is their thoughts on the rate cut? What are their thoughts on the inflation? Is a very important parameter. We believe that rate cut process should continue there. Liquidity pumping has already been done by RBI, so I believe a consistency there. Once that is done, we will start heading into the result season. We'll start with IT companies. As we have seen over the last few weeks, IT companies have been not been doing great, and I think the market anyways expects a muted result from IT sector, something which we highlighted 6 months back in our July report, that we don't see earnings from IT companies for the next 2 3 years, and we reiterate that view that IT companies will not able to grow because the US economies are in a mess and their earning growth has not been the best so far. So we don't expect much good news from IT sector, but once that is done, other sectors, banking, auto, consumer will report their numbers, and we expect directionally better numbers. In fact, even before they start the numbers, we'll see business updates in the first week of April from banking sectors in terms of their credit growth, CASA growth, and stuff. Cement company talking about volumes, auto company talking about volume, consumer companies talking about volume. So all those data points will drive a stock specific volatility. So it's interesting times ahead. Directionally, we remain bullish on earnings. We will not try to preempt any of them in terms of stuff. We are more focused directionally, and we expect good news from corporate India this quarter and a more confident commentary from them. With that, I'll end my part of the session. Happy to take questions. As usual, you can either write in the chat or you can send me a WhatsApp and I'll answer that. We'll wait for a minute for it to see if there is something. With no questions, I will end the session. Again, wishing everybody a happy new year and my Muslim friends who have Ramjan ending tomorrow. Pre happy Ramjan to you guys. Take care, enjoy the extended weekend, and hope we start the next year, new year next week on a broader and good note. Thank you, guys.